Hey guys, and welcome back. One of the coaches at Unga Academy here. And this is the usual chat that we have every weekend about the market trends over the past week. But before we begin, as always, I invite you to please subscribe to our channel. Go and click on the notification bell and leave us a like to this video. We thank you so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Alrighty, so this week was marked by negative returns in the markets. Let's say in almost all asset classes, as shown by the prevalence of red signs on our indicator. So let's start with the stock indexes. The Nasdaq is losing 6.85% right now, and the mini S&P is also losing 5.5%. European stock exchanges have done a little better. The Euro stocks lost only 2%, and the DAX lost 2.5%. As you can see, volatility has increased compared to the last marked levels. In fact, for all the stock indexes, we have high percentile values in the short term, and instead we have medium-high values in the long term. As I'm sure you know, the waves of declines was triggered by the poor inflation data released this week, which sent stock prices lower on fears of possible interest rate hikes in the future by central banks, particularly the US Central Bank. And these fears also led to a decline in bonds. And in fact, if we take a look at the bond market, we can see strongly negative 5-day returns here as well. We see that the T-bond is currently losing 1.41%, and it seems that it has fallen to its June lows. As far as the energy market is concerned, crude oil is currently losing 1.35%. So we see that it hasn't changed much since last week. RB loses 0.85%. On the other hand, heating oil is performing pretty poorly, losing 10%. Then we've got natural gas, which remains, well, more or less at the same level as last week. And as for metals, we see that gold is still down 3%, so this market continues to show weakness. Silver looks a little bit better, at positive 2%, but these are all markets with a clear downtrend. Then there's lean hogs, which is performing pretty well with a positive 3.3%, and it is one of the few positive signs this week. The soft commodities market also performed poorly, with coffee down 6.71% and cotton down about 5%. Well, the few positive signs include soybeans and their derivatives, with positive 2% at the moment, positive 2.5% for soybean meal, and positive 0.5% for bean oil at the moment. The currencies are all negative, which means that the US dollar is stronger than them all. We have a euro dollar moving back towards parity, so values of 1. We see some strong movements here. Currencies generally have lower volatility than other futures. There is no doubt that these are remarkable movements. Take a look at the Australian dollar, for example. The last 5 days, it's lost 2.17%. Still related to currencies, Bitcoin's performance. You see it, Bitcoin has lost 8.38% this week. So it's lost the positive momentum that gave us hope last week and has more or less returned to the lows of the last, 3 months. Okay, let's take a look at the volatility term structure. It's often a good indicator that can help us, identify negative market phases and excessive investor concern. And the curious thing that we've been seeing also for the past few months is that despite the significant declines in the stock markets, there has been only a modest increase in volatility, but without any signs of panic. The term structure is no longer in full contango. However, we only have partial backwardation in the shorter maturities, with the 9-day VIX being higher than the 30-day VIX. While the rest of the structure remains in contango, with VIX values more or less in the middle of the range touched over the last 12 months. So now, how should we interpret these results? Well, frankly, I'm a little perplexed. On the one hand, the data shows us that there is no panic amongst traders, so overall it seems to be a situation that isn't causing investors too much concern. On the other hand, however, the fact that volatility isn't increasing, despite the significant declines that we've seen this week, could point to a further increase in volatility in the future, and therefore further declines, even if traders aren't showing signs of panic at the moment. Let's turn to the rollover dates scheduled for next week. There are only 2 futures on the calendar: sugar on September 22nd and natural gas on September 23rd. And guys, before we say goodbye, I'd like to remind you all that if you're interested in systematic trading, just go and click on the link in the description, and you'll have the opportunity to view a free presentation by Andrea Unger, who will introduce you to his trading method, which helped him win the World Cup Trading Championships in real money trading 4 times. You can also get, by covering only the shipping costs, the bestseller, The Unger Method, or book a free strategy consultation with one of our coaches. So guys, please take advantage of it all. It's right there for you to do. All right. And that's it for today. Please, I invite you to leave us a like if you enjoyed this video. Also, be sure to subscribe to our channel and go and click on that notification bell. And with that, we will see you again next week. Till then, have a great weekend and great week.